Why gold isn't exploding, Middle East tensions and energy market shock. Good morning, traders. This is Eric from Market Meridian. Today is March 3, 2026. Middle East tensions are at their highest in months. Iran is threatening to target vessels in the Strait of Hormuz. Oil prices surged 12% in a single session, but gold? It's barely budging. Spot gold trades at $5,366 an ounce, up just 0.85% today. WTI Crude is at $72.42 after a wild early week rally. Today, we're breaking down 1. Why oil is exploding but gold is stuck. 2. The critical technical levels for both assets. 3. What catalyst will finally trigger gold's next big move? 4. Trading strategies for the week ahead. Let's dive in. 1. Oil market, geopolitical supply shock. First, let's start with oil, because this is where the market's immediate reaction is. On Monday, WTI crude jumped over 12% in early trading, hitting $75.33 a barrel. That's the biggest one-day gain in years. But by Tuesday, prices had retraced to $72.42, giving back a chunk of those gains. Why? Because that initial spike was a knee-jerk reaction to weekend news of Iran's threats. The market is now asking, is this escalation real, or just rhetoric? The core risk here is the Strait of Hormuz. 20% of the world's oil flows through this narrow waterway. Iran is threatening to target ships trying to pass through, effectively, a de facto blockade. Legally, this is questionable under international maritime law. But markets don't care about legal technicalities. What matters is direct attacks on vessels, mining operations, drone strikes, any credible threat that makes insurance costs skyrocket. If commercial shipping stops, oil supplies get cut off. That's the nightmare scenario for energy markets. Technically, oil is now consolidating between $70 and $73 a barrel. Support, $70 is the near-term floor. Below that, we start unwinding the risk premium. Resistance, $73 is the immediate cap. A break above would confirm the market expects further escalation. Until we see concrete action, like a ship being attacked, oil will likely stay in this range. Rhetoric alone isn't enough to keep prices at $75 plus. Now, the big question, why isn't gold exploding? Gold is a classic safe haven asset. You'd think war threats would send it soaring. But right now, it's up just 0.85% on the day, stuck below $5,400. The answer lies in duration. Gold doesn't react to temporary shocks, it reacts to systemic risks. Oil spikes on immediate supply fears. Gold waits for sustained disruptions that cause inflation and growth shocks. Right now, the market thinks this oil spike is temporary. Traders are pricing in a few weeks of tension, not a months-long blockade. Until that changes, gold will stay supported but not explosive. Let's look at the technicals for gold. First, the medium-term trend, bullish. Gold is trading above its 10-day and 20-day moving averages, which sit at $5,200 and $5,100 respectively. That's a strong bullish structure. But momentum is slowing. After February's surge to $5,400, prices have been consolidating at high levels. We saw a test of $5,400 on Tuesday, but it failed. Gold couldn't hold above that level. Key levels to watch. Support, $5,300, near the 10-day EMA. A break below here would target $5,200. Resistance, $5,400. This is the make or break level. A sustained close above $5,400 would signal a new bullish leg. RSI indicators are neutral. Gold is in a consolidation phase, not overbought or oversold. We also can't ignore the macro backdrop. Gold is priced in US dollars. A weaker dollar usually boosts gold, and vice versa. Right now, the Fed is holding rates at 5.5%, while the BOJ is at 0.75%. Yield differentials are keeping the dollar strong. Then there's inflation. If the Strait of Hormuz is blocked for months, oil prices stay high, and that feeds into core inflation. That's when gold becomes a trend asset, not just a safe haven. But right now, inflation data is soft. Tokyo's core CPI is at 1.8%, below the BOJ's 2% target. The market isn't pricing in a sustained inflation shock. So gold is waiting. So what will finally push gold above $5,400? Let's outline the scenarios. Scenario 1, confirmed supply disruption. If Iran attacks a commercial vessel or mines the Strait of Hormuz, shipping will stop. That's a systemic shock. In this case, oil prices spike to $80 plus. Inflation expectations surge. Gold breaks $5,400 and targets $5,500 plus. This is the bullish case for gold. It's not about the initial threat, it's about action. Scenario 2, de-escalation. If tensions cool, diplomatic talks, no attacks, then the risk premium in oil unwinds. In this case, oil falls back to $68 to $70. Gold consolidates between $5,300 and $5,400. No breakout, no collapse. This is the base case right now. The market is pricing in no further escalation. Scenario 3, external catalysts. We also have US data this week. The ISM manufacturing PMI came in at 52.4, slightly down but above expectations. That's keeping the Fed hawkish, supporting the dollar. If we get weak US jobs data or a Fed pivot hint, the dollar weakens, and gold could break $5,400 without Middle East escalation. But right now, the main driver is the Middle East. Let's turn to trading strategies. For oil. Long setup, wait for a break above $73 with volume. Target $75, stop loss below $70. Short setup, wait for a break below $70. Target $68, stop loss above $73. The range is $70 to $73. Trade the breakout, not the noise. For gold. Long setup, wait for a sustained break above $5,400. Target $5,500, stop loss below $5,350. Range trade, buy near $5,300 support, sell near $5,400 resistance. Tight stops below $5,280 or above $5,420. Remember, gold is in consolidation. Don't chase moves. Wait for the catalyst. Critical risk management. Geopolitical events are unpredictable. Use smaller position sizes. Set tight stop losses. Don't overleverage. The market can shift in minutes, protect your capital first. Oil is reacting to immediate supply threats, stuck in a $70 to $73 range. Gold is supported but not explosive, waiting for systemic escalation. $5,400 is the key level for gold, $73 is the key level for oil. The next big move in gold depends on confirmed Middle East supply disruptions. If you found this analysis useful, hit the like button, subscribe for more macro trading insights, and let me know in the comments, are you trading gold or oil this week? Thanks for watching, and good luck in the markets. This video is not the advice for your investment. Please ask financial expert before investing the market.